This episode of the Old Dogs REI Network is brought to you by Mino Studio. Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, where I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is interest rate increase results in 12% mortgage decline. But before we get started, I just wanted to touch base with you guys and make sure everybody out there is doing good. We have a crazy market out there, a crazy economy right now, and I know it's got to be frustrating for a lot of you, but there are still a lot of good things going on there for real estate investors, and there are plenty of people that are doing really well. It sounds like it's discouraging, but hopefully this will be a topic that will be encouraging as we get to the end of the podcast. I'll tell you why. So let's go ahead and talk about interest rate increases that were resulting in 12% mortgage decline. The Federal Reserve's interest rate hikes are starting to make a dent in the U.S. hot housing market. Now, what's happening as rising rates have pushed home prices even higher, mortgage applications have dropped 12% last week compared to the week prior and were 15% lower than the same week 1 year ago. That's according to the latest Mortgage Bankers Association's weekly mortgage application survey released Wednesday. Now, I know a lot of people had to think that this was going to happen. If the rates go up, certain people are not going to qualify as they were with very low rates. It's the first time mortgage applications have decreased in 3 weeks. Even though mortgage rates dipped slightly last week, they remain over 2 percentage points higher than a year ago and are nearing the highest levels since 2009. Now, according to Joel Kahn, he's with the Mortgage Bankers Association, he says that purchase applications fell 12% last week as prospective buyers have been put off by higher rates and worsening affordability conditions. In other words, the inflation that's going on. Economic uncertainty and recent stock market volatility may be causing some households to delay their home search. If people have 401k or retirement accounts that got hit hard with the stock market decline, they could also be concerned, hey, that was the money I was going to use to, purchase my house or what have you. Now, in addition to the sort of new mortgage applications, refinancing is also down. The high rates are also impacting homeowners' refinance prospects. The Mortgage Bankers Association's refinance index dropped 10% from the previous week and was 76% lower than the same week last year. Joel Kahn says for borrowers looking to refinance, the current level of rates continues to be a significant disincentive. Kahn further said that the latest Mortgage Bankers Association's weekly survey results were consistent with the association's May forecast released earlier this week. That forecast predicts fewer home sales and mortgage originations in 2022 compared to a year ago. So the big picture here is that the Fed hiked interest rates in hopes of combating inflation, and now they are starting to have a cooling effect on the U.S. overheated housing market. But at the same time, the rate hikes have priced out even more home buyers, and prices continue to escalate, especially in high-demand, high-growth areas like the West. In Utah, for example, local experts have said rising mortgage rates will likely only slow, not stop, housing price increases while pricing out even more potential home buyers. Now, and for the most part, that could be a temporary thing. So if people are keeping their prices high and people aren't buying, then they're going to have no choice if they really want to sell that home to bring that price down. Last week, the average rate for a 30-year fixed rate was 5.4%, which is a decrease of 17 basis points over the last week, according to Bankrate.com. As a result, of course, home sales are declining, right? As if there are not as many applications out there and as many people buying, then, of course, home sales are going to go. Sales of previously occupied U.S. homes slowed for the third consecutive month in April as mortgage rates surged, driving up borrowing costs for would-be buyers as home prices soared to new highs. Existing home sales fell 2.4% last month from March to a seasonally adjusted annual rate of 5.61 million. The National Association of Realtors provide this information. That was slightly higher than what economists were expecting, according to FactSet. Sales fell 5.9% from April last year. After climbing to a 6.49 million annual rate in January, sales have fallen to the slowest pace since June 2020, near the start of the pandemic, when they were running at an annualized rate of 4.77 million homes. The median home price in April jumped 14.8% from a home a year ago at this time to $391,200. Now, that's an all-time high, according to data going back to 1999, the National Association of Realtors say. Without a doubt, rising mortgage rates, rising prices are hurting affordability. But we should not discount that we're still lacking inventory, says Lawrence Yun, NAR's National Association of Realtors chief economist. Now, fierce competition for limited properties on the market and ultra-low mortgage rates superheated the housing market the last couple of years, but now it's cooling as home buyers face sharply higher home financing costs than a year ago following a rapid rise in mortgage rates. In April, the weekly average rate on a 30-year fixed rate home loan climbed above 5% for the first time in more than a decade, crimping would-be homeowners' purchasing power at the outset of the spring home buying season, traditionally the busiest period for home sales in a year. I mean, that's the time when people are looking for homes to buy. If they're moving to a new area, they want to get settled before the school starts, and the kids are going to be enrolling in a school. So, I mean, that's usually a peak time for home sales. Mortgage buyer Freddie Mac reported Thursday that the 30-year rate slipped to 5.25% this week from 5.3% last week. A year ago, the average rate stood at 3%. Mortgage rates are climbing following a sharp move up in 10-year Treasury yields, reflecting expectations of higher interest rates overall as the Federal Reserve hikes short-term rates in order to combat the worst inflation in 40 years. With inflation at a 4-decade high, rising mortgage rates, elevated home prices, and tight supply of homes for sale, home ownership has become less attainable, especially for first-time buyers. Higher rates can limit the pool of buyers and cool the rate of home price growth. Good news for buyers, but higher rates can also limit affordability. For now, the housing rate continues to favor sellers as buyers vie for a still tight inventory of homes for sale, which has kept pushing up home prices. Even as sales slowed last month, it was common for homes on the market to receive multiple offers. Inventory levels have to go higher before multiple offers dissipate from the market. Yun says, and this is the guy I mentioned from NAR, until prices are likely to move higher, we anticipate again a continued decline in home sales, but not necessarily home prices, he says. On average, homes sold in just 17 days of hitting market last month, unchanged from March or April last year. In a market that's more evenly balanced between buyers and sellers, homes typically remain on the market 45 days. As is typical in the spring, the number of homes in the market increased in April from the previous month. Some 1.03 million properties were available for sale by the end of April, up 10.8% from March, but down to 10.4% from April last year. At the current sales pace, the level of for sale properties amounts to a 2.2-month supply. And National Association of Realtors says that's up from 1.9 months in March and down from 2.3 months a year ago. Now, real estate investors and other buyers able to buy a home with just cash, sidestepping the need to rely on financing, accounted for 26% of all sales last month, down from 28% in March. So even real estate investors are sort of declining in the number of purchases that they're making. Homes purchased by investors made up 17% of sales in April, down from 18% the previous month, while first-time buyers accounted for 28% of transactions, down from 30% in March and 31% a year ago. So, okay, I know I throw a lot of percentages and numbers at you here, but what does it mean for investors? You have interest rates going up, loan originations going down, home sales going down, inflation at a 40-year high, yet home prices are at record highs. So I know that sounds unlikely. The upside to this is that rents in the U.S. climbed to a new record high again in April, and they are expected to keep rising. Rents in the U.S. climbed to a new record high in April, and they're expected to keep rising. The national median rent was $1,827 a month in April, up 16.7% from a year ago, according to a report from Realtor.com. Rent has been steadily increasing since early last year. If recent trends continue, the report projects the typical rent could be more than $2,000 a month by August. The continued surge in rental prices is driven by a mismatch between rental supply and rising demand, largely from would-be home buyers. Beaten by the high cost of buying a home, some prospective owners are opting to keep renting instead. So where are the great opportunities for real estate investors? If you are a real estate investor and you own rental property, you are in a great position right now. Your cash flow should be going up and up and up as demand increases. If you are shopping for properties, it might take you a bit longer to find the great deals. However, foreclosures are increasing as home sales decline, so there may be more deals on the horizon. Either way, I think as a real estate investor, the opportunities are still great for you. I think you can find deals. I think you have opportunities to increase rent and your overall income. And I think those that are picking up homes, I know some that are also in the short-term rental area that are crushing it right now. So I think there's a lot of opportunity for those that are going to stick to it and look for those niches. Well, that's it for today. Please note, Old Dog listeners, everything presented here today, including links, can be accessed in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode entitled Interest Rate Increase Results in 12% Mortgage Decline. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.